Have you ever wondered if your business is as profitable as it could be? It's hard to know when you only have access to your historical information to compare to. The quickest way to answer this question is to calculate the profitability gap. So, what is a profitability gap? It is a very simple formula where you compare your actual net income, your net profit, your bottom line that's on your financial statements, and you compare it to what your profit goal is. And so, why is this an important number for us to care about? Well, it's very common for business owners to focus on watching the sales increase. And then we are profitable, but we still struggle to pay our bills on time. So when we identify that gap and we bridge the gap, we can stop struggling to pay our bills on time. We can also look forward to growing our sales, profit, and cash flow all at a similar rate. Instead of having sales drastically increase, profit is flat, and cash is nowhere to be found, we want those numbers to grow at a similar rate. And so it just helps us really fine tune that process and create systems around that. Also, it's always nice to have a very clearly defined goal so we can have something to shoot for and measure our progress as we eliminate our profit leaks and improve our systems. So when we're thinking about the formula, it's a very simple formula. So first we're going to take our net profit goal. What do we want to strive for? We're going to subtract what our actual net profit is now according to our profit and loss statement. And that difference is our profitability gap. That's the magic number that we're going to shoot to help us bridge the gap and have more cash and profit available to work with. So we're thinking about what type of net profit goal should you have. So when you're selecting that number, you may already have a goal. Maybe you attended a conference or a class, and so you already got a number in mind. You can have that as your goal. You can rely on industry standards, or you can also rely on just general profitability standards across a wide range of industries. And if you are relying on the general standards, here's a quick little chart for you to consider using. So the good net profit margin is 20%, average is 10%, low is 5%. So we're going to use that average 10% in our example. So when we're calculating the first step, we're going to identify what our net profit goal is. So when we multiply our sales by the 10% goal that we pulled from that chart before on the previous slide, our net profit goal is $100,000. We're going to make a note of what our actual net profit is. So when we look back at our profit and loss statement on that first screen, it was $30,000. That bottom line all the way down at the bottom of the report, that's going to be the number that you pull for your actual net profit. Step 3, we're going to calculate the profitability. Again, it's a very simple formula. We're going to take our $100,000 from step 1, subtract our actual net profit from step 2. So our profitability gap is $70,000. So when we compare our actual performance of $30,000 compared to the average that's set for just general standards, we are short $70,000. That's a really big number. So how do you eliminate the profitability gap in your business? One thing to consider is increasing your prices. Really go into your pricing model and confirm that you've considered all of your expenses and really consider the value that you provide. Is it time for you to increase your prices? If you cannot remember the last time you increased your prices, then it's probably time. Also, review the profitability. Look at it by department, by service, customer, project, or even by employee. You really want to dive in and figure out when you create the projections for that department and the goal, are you actually performing at that level? And so when we look at profitability as a whole, it can be very overwhelming when we're looking at all the numbers. But when we drill down and just really think through from a department, service, customer, or project level, it can really help some of those profit leaks really shine through, where you can quickly identify them and then fix them. Also, charge for change orders. Too often customers make requests where they're wanting to change the scope of the work that you agree to, but it might just be a little change. Oh, I don't want to go through the process of charging them for it. But over time, over multiple projects, that can really add up and erode your profitability. So I encourage you to consider charging for those so that way you can capture that profit for your business. Also, look at how you and your team can reduce mistakes. Mistakes are very costly for the business, especially when you've got to send someone back out to a customer's location, and it can just get very, very expensive. So if you have a very high rate of mistakes when you're not able to provide the right service the first time, then that is really eroding your profitability, and it needs to be fixed. Also, limit discounts. I've got a video on how a 5% discount can really kill your profitability, so definitely check that out. You'll be surprised at how discounts can really erode profitability, and you might think, oh, well, I don't give everyone a discount. That's true, but you might give really good friends and family a 15 or 20% discount, and then your VIP customers receive 10%, and then other customers pay full price. Well, when you add it all up over a course of a year, you might be averaging close to that 5%. And so really look at your discount policy. Who should receive discounts? Is it across the board with all services? Is it only available when customers buy more than one service at a time? Just really create that policy around your discounts so you can help bridge that gap with your profitability. So the bottom line is business can be complicated, but when you calculate the profitability gap, it can help you reduce the chaos. One simple number will give you so much focus that you need to research where your profit leaks are hiding. So what could you do with an extra $70,000 in your business? Thank you so much for watching. You know what to do. Please share and like so other business owners can improve their business finance skills as well. Thank you so much.